Have you ever felt that strange disconnect? The news says stocks are soaring, GDP is up, jobs are strong. Yet when you fill your gas tank or buy groceries, you can't help but wonder, if everything's so great, why does my wallet keep shrinking? That feeling isn't your imagination. It's because we're living in the middle of a grand economic illusion, a stage built on debt, lit by blind faith, and cheered on by those too afraid to face the truth. And history has taught us one thing: every illusion must come to an end. When this curtain finally falls, it won't just wipe out numbers in your bank account, it will reshape an entire generation. But here's the most important part. If you understand the rules behind this illusion, then the coming crisis, maybe in 2026, won't be the end. It could be the beginning of the greatest chapter in your financial life. The illusion economy, when numbers lie. On paper, the economy looks perfect. The Dow Jones and S&P 500 keep hitting new record highs. Politicians proudly boast about a strong recovery. But let's be honest, do you actually feel that recovery in your own life? Or do you feel like you're running faster just to stay in the same place? Bills keep rising while your paycheck stands still. That's not a feeling, it's reality. Everyday people are paying a hidden tax called inflation, quietly shrinking their purchasing power. We're living in an economy built on an unspoken agreement. We all pretend everything is fine. We believe that housing prices will always rise, that the stock market will never crash, that somehow the credit card debt will sort itself out. We believe because not believing would be terrifying. But in finance, the most comfortable illusions are often the most dangerous ones. Force 1. The debt trap. Think of debt as a kind of fuel. For the past decade, central banks have been pumping this fuel into the economy with near-zero interest rates. It made everything run smoothly. Businesses borrowed to expand. People borrowed to buy homes, cars, and vacations. Everyone felt wealthier. But that was a trap, a sweet, seductive trap. Because debt isn't real money. It's money borrowed from the future, brought into the present to spend today. And now, that future has arrived. Interest rates are no longer zero. The cost of paying back yesterday's debt has suddenly skyrocketed. Picture a domino effect. Interest rates rise, a family can't afford their mortgage, and the bank forecloses. They're not alone. Thousands face the same fate. Banks rush to sell homes, prices plunge, and soon more homeowners, owing more than their houses are worth, simply walk away. At the same time, businesses start to feel the squeeze. Borrowing costs climb, forcing them to cut jobs. The newly unemployed stop spending, which hurts other businesses, who then cut even more jobs. The cycle feeds on itself. Small cracks turn into a financial earthquake. This isn't a theory, it's exactly what happened in 2008, and this time the mountain of debt is far bigger. Force 2. The interest rate paradox. This is one of the most ironic paradoxes that few people ever notice. Every time the United States Federal Reserve, or the Fed, announces an interest rate cut, the markets cheer. Investors celebrate, and the public breathes a sigh of relief, thinking, finally, the savior has arrived. Everything's going to be fine. But the truth is exactly the opposite. The Fed doesn't act like a kind father. It acts like a fire department. And the fire department only shows up when the house is already burning. A rate cut isn't a sign of safety. It's the loudest alarm bell there is. It means the Fed has seen cracks in the system that most people haven't yet noticed. They don't cut rates because the economy is strong. They cut because they're afraid something is about to break. Look back at history. In the early 2000s, the Fed slashed rates again and again to fight fears of a recession. The result? The dot-com bubble burst, wiping out trillions of dollars and countless tech companies. In 2007, they began another round of cuts to rescue the shaky housing market. The result? A year later came the collapse of Lehman Brothers and the worst financial crisis since the Great Depression. This time is no different. So when you hear the news that rates are being cut, don't celebrate. Ask yourself instead, where is the fire they're trying to put out? Force 3. The valuation illusion. Stocks, real estate, crypto, All are sitting at valuations that, if you looked back 20 years, people would call insane. Yet, there's always a story told to make the insanity sound reasonable. In 2000, the story was, "The internet will change the world. The old valuation rules no longer apply." In 2007, it was, "They're not making any more land. United States housing prices never fall." And now, it's, "Artificial intelligence will unleash an unprecedented productivity revolution. Everything will keep going up forever." Don't get me wrong, technology is real. AI has incredible potential, but the value of an asset and the story told about it are two entirely different things. When excitement and greed push prices too far beyond reality, the system becomes dangerously fragile. It's like a balloon stretched to its limit, shiny, impressive, and ready to burst. All it takes is one tiny pin, a sudden piece of bad news, a major corporate collapse, or an unexpected geopolitical shock, and then, pop. This time is different. Those 4 words are the most expensive in all of investing. Phases of a crash, from illusion to collapse. Every major market collapse, 1929, 2000, 2008, has followed almost the exact same pattern. Phase 1. The illusion. The party is at its peak. Everyone's making money. Skeptics are mocked as outdated or too cautious. Confidence turns into arrogance. People stop asking if the good times will end. They only ask how rich they'll become before that happens. Phase 2. The awareness. The first cracks appear. A few companies report losses. Unemployment ticks up slightly. The mood shifts from euphoria to unease, but most still convince themselves that it's just a minor correction. Phase 3. The downfall. Fear turns into panic. Then comes the trigger, a major event like the fall of Lehman Brothers that sets off a chain reaction of forced selling. Investors don't sell because they want to. They sell because they have to. Prices plunge uncontrollably. But here's the secret that 99% of people never understand. A crisis doesn't destroy wealth, it transfers it. From those who act on emotion and fear to those who are prepared, disciplined, and waiting. The smart strategy. How the rich get richer. The smartest investors don't fear crises, they wait for them. They don't waste energy trying to predict the exact day the market will collapse. Instead, they build a ship strong enough to weather the storm. And when the storm passes, they're the ones collecting the treasures others threw away in panic. They live by 3 unbreakable principles. Build a fortress of liquidity. In a crisis, cash is king. When every asset is being sold off at fire sale prices, the one with cash holds the power. Cash is your dry powder, your chance to buy extraordinary assets for a fraction of their true worth. Understand true value. They don't chase hot stocks or follow hype. They invest in strong, well-run businesses, companies with solid fundamentals, and only when the price is below their calculated intrinsic value. They invest in truth, not talk. Master their emotions. As Warren Buffett said, be fearful when others are greedy, and greedy when others are fearful. When the headlines scream panic and everyone around them is selling everything they own, that's when they quietly act. They buy into fear. The rich don't just know how to make money. They know when to wait to become truly wealthy. The next crisis isn't coming for you. It's coming to test you. It's a filter, separating those who truly understand the game of money from those who've only been riding the wave of illusion and luck. Remember this. In every collapse, wealth never disappears. It only changes hands. From the trembling hands of fear to the steady hands of preparation. So the real question is simple. Which side of that transfer will you be on? The fact that you've made it this far shows that you're not like the 90% out there. You're ready to face the truth. So, start preparing today. Learn, save, and build your own plan. And when the opportunity comes, don't be afraid. Because in times of chaos, those with a plan don't just survive, they win. Don't hesitate to like and subscribe if you found this video helpful. Thank you for watching.